Hello, Warriors. I want to welcome our viewers from investing.com. Let's have a great day. Euro threatening a breakout. Anyone know why I say threatening rather than breaking out? Well, let's be collaborative here this morning. Why are we only threatening a breakout instead of me saying it's breaking out? Any guesses? Because I'll mentor you. I used to call this a breakout. But you don't know what kind of candle you have until it does what? Come on, Stavros. That's right, PM. That's right. Okay. How many people have done that too? Anticipated a candle close, and then it doesn't close the way you anticipate it. So that's a hard way to learn the lesson. And usually it takes a few times to do that. Okay, so we need a close above this wedge line. Or if you want to ask me if I think it's going to happen, I'll say yeah, because, you know, I've been talking about, had this 109.40 level diagnosed for a potential buy for this to happen. So if you bought it here, what should you do? You have 80 pips. What should you do? Structure. That too. Thank you, Andre. So you have 85 pips from a couple days ago. What do you do here? What would you do? Yes, it is a good morning. Trail to stop. Yeah. Okay, you could do that. That's a how trail to stop. What else can you do? There you go, Gavin. Take something. It's not a profit till you book it. Take it and run. Nothing breaks out anymore. All right, Chad. All right, so this is happening. Tomorrow, the other important event for Euro is going to be how it closes for the week. And all you have to do is count to 3, and you count this candle is 1, 2, 3. And this is where it closed 2 weeks ago at 109.40. What a nice off number. So 109.40 was this week's off number, and this week's low was 109.41. Huh. How could something so simple give you a good number like that? So the lesson is trading doesn't have to be complicated. There are simple and powerful things to do. Just because it's Forrest Gump doesn't mean it doesn't work. In fact, I prefer it. I learned it at the Forrest Gump FX Trading Academy. It's called a two candle reversal. So looks like we're going to get it. We'll be above 109.40, but again, I don't know until tomorrow, right? So again, we continue to outperform, and EG isn't done. I do think it's going to be a short euro pound, but we're cracking this 90 level now, and I'm looking more towards 91.30 or so, which would be at least halfway back. You know, we had a 500 pip decline, so why not 91, maybe even a little higher in the next week or so to follow. Something else that's I think could continue to develop here, especially if the S&Ps don't crack. I was talking about looking at shorting treasuries, and you know, we have a lower high here. I'm thinking this might be a B and a C, and part of the reason that the euro may be bottoming is the bonds are actually weaker. They did not recover as much as U.S. Treasuries did. And here's your 30-year. So we're threatening here to turn up. We put in a higher low. In fact, it looks like the yield curve is steepening, okay, because the 10-year isn't as strong, which means rates are, you know, stiffer on the long end. So you have some yield curve steepening. That's could be positive for banks. So anyway, looking for that in TLT. The gold took a shot last night right around 1510. We'll see. This will reversal. We'll see if we could get some follow through. I know a lot of people are looking for much higher, and it's possible. The key is going to be what the yen does, and the yen actually stalled about 30 pips higher up here. If we could crack 107.70, we're going to 8.5, and if we get through 8.5, I expect rates to be much higher than they are right now. Interesting action in the oil. I missed it. It happened last night, but we didn't make a new low. We made a higher low, and we're threatening here. So I wouldn't be short oil here. You know, if you want to be short and you didn't do it any in here or in here, now you want to be short, you look for a rally maybe back to 56 or just sell. The breakdown of the descending triangle, which is going to be under 50.5, that'll take it down to here or lower. I believe we're going to have Grega here and maybe Andre. You know, the whole team is here. I also have a very interesting guest, Julia Cordova. Has a lot of passion and energy for trading. I've seen some of her tweets and what people are saying. A lot of people are looking forward to this conversation that I have with Julia. So stick around for the top of the hour. And I'm going to toss it to Steve right now and see what he's thinking going into this. Hello, Corinne. Welcome to Face. Zolt, welcome to Face. Thank you, everyone, for being here. It's our mission to build up and edify traders every day. And we do it here for free in Face, and we do it here almost for free through a subscription. You're very welcome. So check out our website. There's a link. You could try a trial for $1, and you're going to see there really is a lot of information that would take you hours every day, and we have British accents here, so you know we're professional. There's another one, see, so you know, women with British accents makes you professional. So you have all of this data. You have all of these different methodologies: Elliott wave, harmonics, basic technical, candlesticks, as well as macro. You get push alerts to your phone if you're out and about. You could take us on vacation with you. Just put the whole team in your briefcase or your purse, and any major breach or pattern in play comes up, you're going to be aware of them, see how we're doing here. So here's some of the positions that teams are taking. Greg is bullish gold. Euro yen, Blaker called. I know some people took that. That's working with what happened. Andre is bearish a dollar and getting some direction in his direction. And here's Blake. So you get all these. You get the areas to enter. You get targets and where the pattern would be invalidated. That's your risk. And then you have this part of the website where you get all the charts, all the takeaways. This is a lot of work. The team works more than an 8-hour day. Steve Volge works 24 hours a day. Huh?
You have extra tools at your top right of your screen, Dale. Amazing tool there to manage your risk now that you are about that.
Nice. Oh, okay. Risk management calculator. What don't we have?
Lower, we also have the market trading hours, which is a nice little tool.
What don't we have that would take less time?
We have everything.
Okay, that's what I thought. Okay, so anyway, guys, we have everything. So you don't even really need to go anywhere else except your trading platform to click your mouse. So how are you guys doing today? Who wants to, who should I hand the ball off to? maybe we could run a reverse and I could pitch it to Steve and he could toss it to Andre. And then Andre throws a long pass to Greg Horvat.
Greg is going to be tomorrow with
Touchdown.
us. Andre is going to be with us today.
Oh, okay. Okay, so only Andre, the handsome harmonic guy?
Yeah,
That
so
guy?
today, yeah, that guy,
okay.
that Portuguese guy, yes.
The handsomest harmonics on the net.
Yes, so
Yeah.
First of all, I don't know if Stelios can be with us today. We obviously had overnight news. I mean, it wasn't night if you're in the US, so it was afternoon. The market reacted, very strongly lower in news that
about Turkey.
No, that there is no progress. After
okay.
2 days, there's been no progress between the US and the Chinese delegation. And due to that, the Chinese are considering to leave a day earlier on Thursday, which means today. So the market immediately tanked lower. I mean, the S&P was roughly 1.2%.
20 handles or so.
Lower at that point within a few minutes. The move lower has almost completely been retraced in essence on no news. I mean, they got desperate to save the situation, so they gave us some headline about them discussing with the Chinese about a currency accord, which is as vague and general as it sounds. I mean, they've had these kind of accords in the past, has made no difference. So theoretically speaking, we have a market that's holding on to its gains because of more hope, that a deal can be delivered. We get news that looks more and more unlikely. Justified, the market moves lower, and then we should assume or believe that the move lower got fully retraced on some vague news about a currency accord. So you can take it, as you believe you should take it. But the fact remains that this has prevented the market from producing some big bearish breakdowns, both on the Nasdaq. I will take the screen, Coach.
Okay. And you know what, Steve? Hope is the oxygen in our lives, but it's the carbon monoxide in our trading.
Yeah. I would
I hope this one works.
Although this is not the kind of hope the markets work on. I mean, it's a way more obscure hope, if you ask me, because now everything is run on hope. I mean, hoping gets the markets bid. Disappointment on hopes has a very, very temporary effect. So you can see here, we were trading below this wedges trend line overnight. We've retraced it once again. And if you have a look at the Nasdaq,
it broke it.
It's again the exact same situation, right? I mean, it came down.
That was even cleaner.
This trend line,
didn't even poke through it.
To almost unchanged as we speak. So it is what it is. I mean, you have to trade with what you currently have, and what we currently have is that both of those indices, which are the most important, especially the S&P. I mean, it's the global barometer for risk, have failed yet to deliver so far to deliver a breakdown. So that makes it likely that we're going to see more upside. Now, of course, from getting saved from a breakdown, doesn't necessarily mean that this is proof that we're headed higher from here. And as you know, 2960 is and remains a very key resistance area. So I think it's all about those 100 handles if we're talking about the S&P. 2860, because 2860 is a triple confluence of supports, and also a level that will have, confirmed that we've broken down from the descending wedge. I mean, a clean breakdown from the descending wedge. It's also going to be like a lower low. and on the other hand, 29.60. So 28.60, 29.60, everything in between looks like noise. So personally, I would refrain from getting caught trying to trade that noise. I mean, I still have a short position and I'm in the money, so I'm going to be holding it. You know, half of the position that I have, because the other half I took profits at 28.82, you know, last week. But if I had no position, there would be no chance that I would try to trade it at 29.13 that we currently are. That's my point. Okay. So you want to be short. If the market gives you the ability to resell 29.60, it will still be a decent risk reward opportunity. Alternatively, I think that you'd better wait for a breakdown from 28.60 if you want to have more confirmation. And that's it. There's nothing else to be said having to do with risk. Don't get caught, as I said, in the noise, and you know, wait for a clean break if you have no position. That's well, my insight on that.
How about U.S. dollar yen was pretty resilient. It bounced back from that news. I think we're down to what, the 107 range, low 107.10.
Yeah, and if you remember, Blake said that as well. He was looking for potentially another move higher. I also said that last week, if you remember, I said that, listen, we have a confluence of supports here, roughly at 106.50.
Play the recording.
Yeah, as long as we stay above it, there is a chance that we're going to see some type of a recovery from the USD yen. So far it has recovered somewhat. Now, if the next question is going to be, okay, you know, is this recovery we've seen so far from that area inspiring? I mean, does it look so far, you know, as a new move to the upside has begun? No, so far, no, it doesn't. So far, okay. So far there is no real momentum in this rebound, but in essence, it's like
what did bonds do on that news last night?
The bonds are actually trying to push lower from this recent consolidation. Perhaps, though, we should redraw a little bit the form of it, because
what a weak recovery compared to the treasuries.
Yeah, it might not be a triangle. It might be something like this. So I would be a little bit careful here, because there is still the possibility that we might see you know, another bound from the bonds, but it has to happen from here, because if it doesn't happen from here, then I think we're headed lower, you know, without any more rebounds. So one way or another, you know very well that my conviction was that this impulsive move lower could not have been, it's extremely hard being the only pullback that we're going to see and then straight to new highs. So I have no doubt that we're going to see lower prices than the recent low we found at 172.17. The question is, it from here, or is it from a little bit higher from here?
You were looking, I think, to the short treasuries last week. Did you do that trade?
I was looking to short treasuries, and you'll see, give me a second, a lot lower. So no, because I was looking at this formation, if you remember, which never broke to the downside. We actually accelerated to the upside. So then I abandoned any plan to go with the treasuries, because I didn't like the fact that this rebound extended a lot more than I wanted to see. Now, we didn't post new highs, so there is still a valid probability that we're going to see some type of a correction.
Can I interrupt you for the last time?
No, you can interrupt me.
Okay, so you showed the bond chart prior to this, and I think the last two charts, this chart and the bond chart, is a rationale for a euro rally.
If you remember, we discussed that, what was it, 2 days ago and yesterday.
Well, I know I'm an elephant, but I don't remember everything.
Yeah, we had this exact same discussion, saying that this type of a divergence,
it's Groundhog Day,
should eventually, if sustained, should eventually lead to some kind of a rebound from the euro. Yeah. And indeed, it seems to be manifesting today. And as you very well showed, the euro USD is currently testing confluence of resistances. I actually sent an intraday update about it, showing the 4-hour chart. Now we're going to see it on the daily. It doesn't really matter. We see that we have the 61.8% fib We also have this descending trend line resistance. You had the same type of trend line in the chart you were showing. So, it remains to be seen how we're going to close the day, because if we do close the day above this, then we open the next upside resistance, which is at 111.10. Of course, little steps here and there are not enough to signal a trend change on behalf of the dollar. That is what we were discussing earlier in the chat room with some people as well. I mean, definitely it is worth noticing if the Euro USD is going to close above 110.20, 110.30 today, and it might lead to further gains. But in order for us to have a real trend change in regards to what the dollar is doing, we would need to eventually see this descending wedge breaking to the upside. And if you want to look at it from the DXY perspective, we would need to see some progress here as well. Now, the first area of support, we are approaching it, right? I mean, it's this ascending trend line. But then we have 97.70, quite an important area. And then we have this ascending channel support. So, we might be seeing here the beginning of dollar weakness, but the evidence are still inconclusive. I mean, we have very few evidence to try to aggressively push against a trend that has been ongoing for some time. So I do understand why somebody would want to start building some dollar short positions as long as they know what they're doing and they have limited risk. But you need to acknowledge that so far, it is not the high probability trade, right? We don't have any type of technical violations to the uptrend. So as long as you are fully aware of that, and you know that you can manage your risk, you can start doing it. Personally, I'm going to be waiting a little bit longer. Okay. So that's my point of view having to do with the dollar. We might need to wait a little bit longer to have confirmation one way or another. I don't think you should be worried about it, because if we get to see a legitimate breakdown in the dollar, trust me, that's not something that's going to last for a day or two. So you might have lost your opportunity if you're a little bit patient. Probably it's going to be something that's going to be lasting at, worst case scenario for several weeks. If we start seeing, a legitimate corrective move lower, or even a big reversal and an impulsive move lower, I mean, even worse. So, in my opinion, it makes sense to be a little bit prudent. Now, if you're really looking into building some short dollar positions, now there are a few places you could start with. And this is one of them. Now we went to a 4-hour chart, okay? This is a Kiwi chart. As you can see, it's not that beautiful, but you can definitely make the argument that this is an inverted head and shoulders formation. Now, depends on, you want to say that, the left shoulder is that. You want to say that the left shoulder is bigger, depends on how you want to draw it. It's this. Okay. One thing is for sure, one way or the other, we are testing the neckline of this inverted head and shoulders formation. At the same time, this is also, let's see what kind of a fib it is. Like the 50% fib. I mean, on a clean break of this neckline, you can start by buying a little bit of a Kiwi, right? Also, here is the Aussie. You can make an equivalent argument, although, this is a more inclined formation, so you might want to go with just a traditional trend line, in which case you can still see that we're breaking above it. Okay, so baby steps, but some pairs seem to be making those steps. Also, nice rejection overnight from, there it is. Nice rejection overnight from the USD NOK. Nope. Here it is. USD NOK from previous highs, actually a little overthrow as well. So nice one here. If you want to go back to the daily chart, actually, you can see more clearly we had an ascending triangle here. So far, a nice rejection. Look at this daily candlestick so far, quite a nice reaction. And I was also showing earlier in the chat room, we know that it's very nicely inversely correlated to the Euro USD. Look at what USD SEC has produced here. Right, USD SEC gave us a nice overthrow from this ascending wedge. Went all the way to the confluence of the 161.8% extension of this corrective move lower, and 127% extension of this corrective move lower. So a nice confluence of resistances. And look at this daily candlestick. It has already engulfed the past 3 days of price action. So the past 3 days, all of them up days, have been engulfed within a few hours today from this daily. And now we are back testing a horizontal support resistance area. So this 980, 981 support zone, quite important. I think that if we slice through it as well, that's probably going to be a nice false breakout signal to be short. So I also like USD SEC to the downside here. Depends, of course, because it's extremely important, on how we end up closing today. Okay, so that's going to be important. Now, we have data. Yeah, we have a lot of data coming up in 2.5 minutes. We have initial jobless claims, we have CPI, we have core CPI, year on year, month on month, continued jobless claims, and Canadian housing prices. Oh, speaking about the Canadian also got rejected once again from this confluence of resistances at 133.50. If you remember, I kept talking about it, saying that, listen, you like it to the upside, you need to be patient, you need to see a clean break above 133.50, 56 to be exact, because we are in this ascending triangle, and that's also the 61.8% fib. So far, no big rejection, obviously. I mean, we just, pushed lower by what, 50 pips or whatever. But the fact remains that we remain trapped within this ascending triangle, which is enclosed within this larger ascending channel. Okay, so looks like the USD CAD might want to produce another move to the upside. At least that's how it looks so far, but it has to prove it. And in order for it to prove it, you need to see a break above 133.56. Until that happens, we remain range bound. As simple as that. Okay, 1 minute, 10 seconds left for the data. So we're obviously going to cover the data before we go to more.
Big day in the wand, Steve. I'm wondering if you think it changed the picture. I thought we'd have a new high, and it didn't happen.
So far, no, it hasn't.
It
but
looks like it could roll over here.
But
and that's with lousy news too on the trade.
But yes, on one hand, yes, that's the case. On the other hand, what do we have here? We have a cup and handle formation that has broken to the upside.
Yeah.
We have the breakout area being just below 7.
Right.
And so far we see a consolidation here. So, no real hard evidence.
Not yet, yeah.
No, yeah, I mean, this might be just a consolidation before moving again towards 730.
To get the third drive, yeah.
Which would complete, first of all, the inverted head and shoulders formation, the cup and handle formation, and the 161.8. Okay, let's see. Data. weaker CPI data across the board, initial jobless claims as expected, a little bit stronger Canadian new housing price index. So CPI could move a little bit the market. Let's have a look at what's happening here with the dollar complex. Yeah, seems to be weakening a little bit, but let's give it a minute. Yeah, Euro USD pushing almost the highs of the day.
Yep.
Let's have a look at the USD CAD because we had also Canadian data. So let's switch back to it for a second. There we go. So yeah, USD CAD is pushing lower, a little bit lower from where it was, but so far really unimpressive reaction from the market as it seems. So almost no reaction to the weaker CPI data. Anyhow, the initial jobless claims were fractionally different than expectations, so that wouldn't move the market in any case. Okay, yeah, marginally weaker dollar as it seems so far, marginally, but nothing to really.
Gold made a new intraday high, and it's come off quite a bit on that news.
Yes,
Couple bucks.
it also did that overnight following the news.
Yeah.
So
trade,
there
yeah.
we go. I actually pushed some updates yesterday night when that happened. As you see, gold, when we got those news,
could be wrong over to this high that we just had.
Yeah, almost made it to that trend line, and actually silver
went through it.
Same deal here. You can see.
Yeah.
And they've pulled back. Now, do I think this is a rejection that's going to make us move lower? I think it's too early to say that. I mean, it is to be expected that these trend lines would create at least an initial reaction as a likely outcome. But let's give it a little bit more time because I have to be honest. There is a decent chance that we have found lows both in silver and gold. No,
hey,
I'm not saying.
Steve, when people say this to me, Dale, let me be honest with you. You know what I'm thinking? Why me? Why start now?
Yeah, no, to be
You know
honest,
what I mean? Let me be honest, like it's a special occasion.
Honesty
I'll be honest with you, it's a special occasion, it's an exception.
Yeah, that has been kind of it depends. I mean, governments are dishonest about almost everything, right? So,
but with you, I'm going to tell you the truth.
So,
right.
Let's see, because I haven't had a look at the chat and what people want to see. So let's have a fast look and then we can pass it to. Hi to everybody that says hi and good morning. Which set for upside. Boons rocked by FT article on QE dissension. Yeah, actually, I linked that to the chat room from the Financial Times. There is an article in the Financial Times, actually. Let me help you out a little bit. That's probably not really legal. That's why I'm not going to show you the whole article. I'm just going to show you the, there it is, the headline, right, from the Financial Times. So here it is. ECB's Draghi ignored in-house advice on the decision to restart QE, and yes, I linked a little bit of the article. I mean, just some highlights in the chat room for exactly what you mentioned. So yes, that obviously affects boons to the downside because let me make it simple for people that don't understand that. If it was a unanimous decision, it would show that the ECB would be much easier in making the next step in monetary easing. But when we get to see that even the restarting of QE had torn the committee, the next thought is, okay, so how easy will it be for them to, to press forward with more monetary easing if needed. So, the response in that would be probably not that easy, right? Because if Draghi had to ignore, some of the fellow board members and, their advisors on restarting QE, that means that doing, whatever is needed next might be even harder to do, right? Not so liars in news, currency packed part of potential trade deal. Yeah, but we've heard that before, so I'm not really buying it, mate. Let's see, gold will fall, I think. Corn will rise. Not necessarily. I mean, we need a lot more evidence for that. Core CPI 2.4 despite soft print. Yeah, I actually saw that, and I mentioned that the last time we had CPI data.
There goes gold.
I said that look how funny it is that when it was convenient for the Fed, they would always mention core CPI, saying that, yeah, we don't care about the headline number, we care about core CPI because it's less volatile. For those that don't know, core CPI is the CPI X food, X energy, because, they consider those more volatile. So yes, core CPI, which according to the Fed is like more reliable than the headline CPI, is way above target, right? And, they seem to be ignoring it, of course. Of course they will. And they will ignore it even if it goes higher than that. Gold is still pulling back. It's actually now unchanged on the day code since you asked about it. We also have questions about Euro, CAD, and Pound.
Yeah. And the yen is making new highs. Well, I mean, it's recovering. So I think we had that Euro yen on PIP. That's looking pretty good.
Yes. Yeah, actually, all the pips, the 7 pips we currently have are all in the money, which is, a nice.
Yeah, once we got through 118 in Euro yen, look at it, it just accelerated.
Nice rebound here from the Euro CAD, but, you tell me, is there really something to do here? I mean, we remain in a descending channel, so if there is a trend, it's lower, right?
Yeah.
It's not strong, obviously. It's not strong at all. It's lower. And keep in mind that 147.50 is also resistance, and we're not far away from that. So personally, what I would do about EuroCAD is let it be and let other people trade it. That's what I would do with EuroCAD in, judging by how it looks. I mean, there are much better opportunities out there. You should probably focus on them. And Pound CAD, now, we drew one scenario some time ago. If that was a triangle, it should get resolved to the downside. It proves that this was not a triangle. So the question is, what kind of a formation is this? Let's see now that we have a little bit more price action, and probably it's that kind of a formation.
And head and shoulders, or Steve?
Yeah. Yes, Andre?
Yes, and heads and shoulders eventually, no?
The Pound CAD, you mean?
Yes, that's one that you are showing there.
Can be. It's too early to take it into consideration, if you're asking me.
Yeah.
Too early.
Well, we need the violation of the supports to consider that a valid.
Yeah. Regardless, indeed, I would be watching this channel closely. It looks to me like the chances of a breakdown are higher than the chances of a move higher. Now, of course, as we've explained multiple times, corrections can be rather complex and they can unfold for longer than you initially expect. So you might be, initially you said, oh, this looked like a nice triangle. That's why we have formations and we keep working on them. It proved not to be a triangle. Okay, now you have more price action. So you can say, okay, this might be like a bear flag, but nobody tells you or nobody can ever guarantee you
how long it will extend.
Exactly, that you're not going to have something like, this, taking more time before something happens, right? That's the problem with corrective moves. They're not that straightforward, and they can take multiple forms in comparison to impulsive moves that are much cleaner, much easier to identify, etc. But it is what it is. So what would I be doing with pound CAD here? Exactly what I advocated with EuroCAD. Absolutely nothing at the moment. And what's the beauty with markets? There are so many markets out there. You have absolutely no obligation to have to do something with something. I mean, you don't like how it looks. It's not clean. Move on. Find another chart. Find another currency pair or whatever else you like to trade that looks better, that is more promising, that gives you a higher probability trade, a better risk reward, you name it. Right, Andre?
Or if you specialize, Steve. Oh, sorry.
I agree.
If you specialize.
I agree 100%.
If you specialize and you trade in a few instruments and there's nothing to do, it's also okay to do nothing, even for
I agree with you.
Even for a whole week. Can you imagine not trading for a whole week?
It's the best option.
Yeah.
Although, to be honest, if you want to specialize on a few instruments, in my opinion, you have two solutions. Solution number one, trade them in a shorter term time frame as well. So you can actually, find opportunities, but, in smaller moves. And solution number two, end up trading a lot less, as you said. There's no third solution, because the more you restrict the number of instruments you're willing to trade, statistically speaking, the less good opportunities you're going to be finding. It's as simple as that. That is the main argument for monitoring a lot of markets, because this way it makes it much easier for you to screen out anything that doesn't look so promising. You can say, no, why should I bother with this? It doesn't look promising. Next. Why should I bother with that? It doesn't look promising. Next. So if you're monitoring like 15 markets, inevitably, there are a couple of good opportunities out there.
Metals are getting hammered.
Okay, Andre. Show us what you've got. Take the screen and show us what you've got.
Let me push.
And Julia is in the house, so anytime when you're done, let me know, Andre.
Mm-hmm. Okay.
We can see your screen.
You can?
Yeah, we can.
Got it.
Okay, let me try to share with you just a fast approach on what's happening with the index in general with the index market. So this is the Australian index. We don't need to count them, but I just want to share with you just a fast view of what's happening with some of those index markets. So this is C20, so this is the Portuguese index, followed by the Euro stocks also. It has found resistance at 224 extension. It has found also support at 161.8 extension. The French, the same thing. UK, well, we have a lot of examples of, and all of them completed patterns. NASDAQ, Dow Jones, S&P, as I shared before. We have a lot of things happening since the last 2 weeks, eventually. And let's go into our Forex market. And let me try to get you synced on with what is happening at this point, or what I see at this point in the market. So this is euro versus dollar, and we are now rejecting the 200% Fibonacci extension, which is the default projection for this lower time frame or lower degree inverted edge and shoulders that I published overnight, or actually one of the most recent charts on euro versus dollar. Then this one, if extended, obviously there's also this bullish alt-bat pattern, and we are now trading the golden fib So we are now trading the second target for this bullish pattern. So it's a natural. I will not ignore a pullback from these levels, but there's also one bearish bat pattern projected at 110.53. So this is the 88% Fibonacci retracement from these highs here. But we need to take in consideration that the market eventually will trade, will complete that pattern, taking in consideration the previous structure highs. So that's why I shared those two levels as a potential pressure level. So considering also this confluence between Fibonacci extensions and retracement levels, so I will pay attention to this price level on euro versus dollar if the price decides to trade there at this point. So based on what we have at this point and based on the Fibonacci retracement that we have, that may form also another bearish opportunity to trade. So from below, obviously there's an inverted head and shoulders below, and this lower one, this lower degree, also suggesting upside momentum. But we are now facing both the golden fib and the default projections for this pattern. So at this point, we need to wait for those patterns to form eventually on cable. And as Dale was mentioning before, threatening a trend line is not the same as assuming the market is breaking or the price is breaking the trend line. We need a complete close candle above those trend lines. So basically, we have a lower time frame or a lower degree time frame structure trend line that is now under pressure, or eventual one. So that's why the market is trying to, it is rejecting this trend line at this point. So we need to wait for the breakout of this major structure here. So we need to adjust this shining channel. Let me draw that again. But you get the point. You need to wait for the breakout of the structure. I'm drawing this as a parallel structure. Obviously, the market is now threatening the previous structure low. So this is eventually, if the market bounces from here, it will act as a false breakout below the previous low. So at this point, we need to wait. But let's take in consideration an eventual breakout. Let's go into a lower time frame. Let's go into a 15 minutes time frame. Not my comfort zone, but we have also a trend line now under pressure on cable. So I assume that breaking below that structure will retest the previous lows, will threat the previous lows, and eventually will threat also the previous daily or higher time frames, the previous low. So basically, this is what we have for cable, now trading also the golden Fibonacci retracement, the golden fib at 61.8 retracement, and it's showing some pressure from these levels. And in terms of patterns, there's nothing specifically. If the market decides to bounce from here, I assume this as a false breakout below, and I need to wait for the price. Eventually, there will be opportunities to trade above with a breakout above, but eventually a breakout above this daily fractal level will form patterns above. So we have bearish scenarios eventually above. So this is Aussie. This is one of the trades that I pushed recently. Basically, it was supported by the double bottom. So we have a double bottom validated with a broken neck, default target and default projections for the double bottom achieved. Pulled back to the golden fib, and overnight I decided to push this trade, nailing that Fibonacci, golden Fibonacci retracement. So we are now obviously with this trade secured at break even. With some of the, well, I always suggest half of my initial position size. I split that position size, and I will keep the remainings, and I will try to hold this long. So basically the default target for the pattern position at confluence zone. This is a cluster zone between the golden fib, the internal and the external extensions levels. So this is my projection for this pattern. Note that we are trading obviously in a bearish momentum on Aussie that I expect to reverse. Australian versus New Zealand. This one, it can change, and that will depend on what Aussie will offer in general. So if Australian dollar starts to rise and starts to trade higher, eventually it will take more time to this structure to break below. But based on the Fibonacci that we have and based on the lower time frame criteria that I have here, and well, I assume I never assume the market will trade higher or lower. I just measure the price behaviors based and supported by those Fibonacci levels, and I assume where is the next. I search for the next event. So where is the next probability or where is the next probability for the market to offer me something regarding those patterns. So basically, I search for the lower prices on Australian versus New Zealand with a bullish crab pattern projected at 168 extension, and actually a few points below one major shark pattern at 224 extension, retesting this previous structure low. So this is a 2 hours time frame chart, 4 hours time frame chart. You can see a retest of these previous structure lows, completing the bullish pattern. Dollar versus Canadian dollar. So we are trading a bearish territory. So I call it a bearish territory between two different possible scenarios here. So first of all, the completed bearish shark pattern 168 extension printed there. The market has already being pushed below. So it has found support at the very first Fibonacci level, the 23% Fibonacci retracement. Usually those markets, those patterns will put the price trading back to the 38% Fibonacci. We have also 200 moving average approaching from below. And for now, we can consider this as one eventual double top. So we are now threatening the previous structure highs. Obviously, that pattern will validate as soon as the market breaks below the previous structure support, and we can try to measure this swing and try to project it below the previous structure support. It's a virtual projection for now. We need a breakout of this structure to assume the pattern is validated and assume the price will fall. NOK, it's another other pattern, another trade that I pushed for our community, a suggestion to go short based on two different patterns. One of them, and not only, we have also the channel structure that I shared on our platform. We are retesting that structure trend line, resistance highs, and false breakout above the previous high, and the completion of this pattern synced with this synced, not very well synced because the market is trading high, but I always search for a zone and not a specific price. I know that the pattern will complete a specific price, and sometimes I use a pending order to trade, and I put a pending order with a specific price, obviously, and I use those Fibonacci's to put my orders. But if I don't have an order or a limit order waiting for the specific price, sometimes I search for a zone. I observe the market conditions, and if the market offers me something, I will try to take advantage from a higher time frame event using a lower time frame event. And that was a perfect example here with NOK forming a perfect shark pattern. And I assume, and this is, I don't like to call it a game, but it's a game of assumptions. I assume the market will fall into the default target, which is the 50% Fibonacci retracement. So this is a retracement from the weekly support to the most recent highs. I assume the market will try to search for the 200 moving average approaching from below. Obviously, if I start to go into a higher time frame to trade, by default, when I push my trades, I measure my first target at 38% Fibonacci. So that's the level that I use to start to partition my trade and start to break even my positions. But assuming and admitting that the market, those patterns tends to search for a default target at 50% Fibonacci retracement. And just to finish this approach, nothing to say at this point for Mexican peso. It has fall from the 224% Fibonacci as published before. On a lower time frame, this is a 2 hours time frame event, so the market has fall from there. We are now facing the golden Fibonacci adjusted at these at those highs, so we are now threatening also. We are trading between the golden fib and the 200 moving average. So at this point, there's nothing to consider. Let me just try to measure one eventual Gartley pattern. So we have a golden fib there. I will search for the 127, but I need also the eventual 168 extension there. So basically,
Harmonics on the Fly by Andre Cardoso.
Eventual Gartley pattern, a retest of the bottom projected there. I'm not sure if I'm drawing something here. Trading view, it's a little. So take this picture. I have my magnet here, trophiating. Okay. Eventual Gartley pattern, confluence between the 88% Fibonacci and the 127 Fibonacci extension below. I'm sorry, a pattern that can extend into the 168 extension and printing lows below the weekly support. So we are facing we are seeing now a 2 hours time frame chart, and basically we still threatening the weekly support with patterns projected below. I have a few other to show you. No, DAX has produced one amazing shot here that I need to share this with you. I shared that pattern above the bearish bat pattern. It has been followed by this lower time frame. Actually, all this pattern has been preceded by these amazing inverted edge and shoulders, which has triggered this bullish momentum. And the market has found resistance, completing that pattern, and it has found support at the 50% Fibonacci retracement. So we have a new daily support there. We are now inside the bearish. Eventually, I see this as one eventual bearish. A bearish flag, and I can start to project, and I can start to project things whenever I want, but it makes sense only if the market starts to trade below the daily supports. Obviously, in terms of harmonic trading, I will start to project that pattern, the bullish pattern below for DAX 1139, if the price decides to trade to break below the daily support. For now, we are inside this eventual bearish flag, and I can also start to project start to search for the 168 extension actually the shark extensions, my box for the shark patterns. So basically we have one first high, pullback, one new higher high above the previous one, false breakout above. And if the market decides to break this previous structure support, I can start to project patterns between the 160 on extension at confluence with the golden fib 1172. And let's see if the market holds there. If not, we have more levels there for eventual lower and minor bullish scenarios there.
I have a question for you, Andre, before you wrap it up. You know, it's my belief that the markets are a metaphor for life, and that a lot of the methods that we use to analyze the market are also laws of nature, like harmonics and fibs, etc.
Indeed,
How can
specifically
someone,
Fibonacci.
yeah, how can someone apply harmonics to their life and to you?
It's a very interesting question, because we tend to push our lives inside the markets, all the habits, all the customs, or all the routines that we had in our normal lives. We tend to push all that experience inside the market and try to take advantage from that experience in our personal lives, but that doesn't work. What actually works is the discipline that you implement trading the market. You can take that example into your personal life, and that happens to me recently when I decided to join this journey. That happens to me on my daily basis, on how I organize my life and how I manage my finances. Also, it's very important. It's no useful to trade and to make money and then spending and expending money without necessity. No.
Okay, what harmonic pattern do you most identify with? Are you a shark?
Oh,
or are you a gartley? Or are you a cipher?
Sure yet.
Are you a cipher, Andre?
Eventually, I'm a gartley. I identify myself with a gartley.
Thank you so much, bro, for the review.
It's my views there. I hope you enjoy, and thank you very much for having me here.
All right. Andre Cardoso, you could see Andre's harmonic work as a subscriber. As you could tell, he's an artist. So, Julia, thank you for your patience. And I'm going to make you a panelist. And then I'm going to give you the ability to, what happened? Oh, here you are. Okay, Julia. Yeah. I just unmuted you.
Hi.
And hi, Julia. Yes, very nice to meet you.
Nice to meet you too.
Oh, there's a little...
Thank you for having me. I'm so honored.
I don't know what kind of audio thing you're using, but it's not good. Do you have a headset? Yeah. What are you talking on?
Can you hear me?
Yeah, it's not going to work. No, there's a delay. There's an echo. You sound like a robot running out of juice with a low battery.
Oh no, I'm so sorry. I don't know.
Okay, better now. Better now.
How to fix it?
All right, let's try it. To share your screen, you just hover your mouse over the drop-down menu. You'll see a green box. It says share, and then we'll give it a shot and see how it goes. And we could always reschedule and maybe a mic or a headphone. So this is your gold chart, Julia?
Hello.
Yeah, I can't hear you. I'm so sorry, Julia. I'll get in touch with you on Twitter. But
okay, sorry about that.
It comes in and out. So is this your chart up here with the gold, Oanda? Okay, we're going to wrap it, everybody.
Dale, I'm sorry, it's my chart. I'm sorry.
Oh, it's okay.
Oh, I can
Julia's,
see that. I think I can still see.
she's having audio problems. I'm going to call it a wrap, everyone. Good hunting the rest of the day. We'll see you for TGIF. I have tomorrow open, Julia, so you could come back tomorrow and we'll talk about having better audio quality, okay? All right, everyone.
Okay,
Remember,
sounds good. Sorry
all right,
about that.
that's okay. Remember, everyone, don't just count your pips, and there were many from, selling the gold on the news today. Count your blessings. And we'll see everyone to wrap the week up tomorrow. Adios.